Traditional flips in the GTA have been dying off for the last few years, mostly because of cost, between the cost of land, cost of construction, they simply do not pencil. However, smart money builders have been pivoting, and there are a few that are starting a new trend, especially with infill residential condos. It's a niche topic, and I'm going to talk to an industry insider, my friend Matt from Foremost, who's going to talk about all the projects they have financed to date. So you can kind of get an idea what people are doing and where the money is and how this actually makes sense, even in a super competitive market like Toronto.
Foremost Financial, we source our loans from private investors, so we don't have the constraints that banks and other credit unions and institutions have. So a bank or a credit union doesn't necessarily finance small infill construction because it's too small, too complicated. A similar amount of work goes into financing the construction of a small project versus a large project. So a lot of the bigger banks and institutions, they focus on construction loans at 10 million or more, which leaves a space for construction projects 10 million and under quite open. So we source our funds from private individuals in a pooled fund. It's called the mutual fund trust. And then we're able to kind of lend out the money based on how we want to underwrite it. So we're in control of the funds that we lend. So we're able to lend quite more entrepreneurial, faster, and easier than some of the larger institutions and some of our competitors.
Okay, so is it safe to assume that your money is already pooled? So, for example, if somebody comes to you for a project, I want to fund a $2 million project, you're not raising that money from lenders. You already have the money like allocated for, spoken for, or are you
We
raising it?
do. Yeah, it's hard to so we have a $70 million line of credit split between HSBC and Equitable Bank. So we also have money available to us. So there are a lot of private lenders, but very few private lenders lend on construction, and they do it quite well because you need a fund to finance construction projects because if you get a construction draw, you can't just run around and try to raise money from individual people. It's always good to have the funds committed and available to you. So that's why there's lots of private lenders, very few that are in the construction financing space because the availability of capital is quite key.
Okay, so I see what you're saying. So you basically have this line of credit that's secured with all these investors potentially, right? And that's what
Yeah,
gives you access to funding immediately. Okay. That's
yeah.
really, for me, the mechanics are important just so that I understand because I know with a lot of the stuff that I've dealt with in the past, and most of it as it relates to private lenders, it's like, yeah, yeah, we have the money, but then really they're out there searching immediately for that project. And then, whether or not every single lender that they're reaching out to is then underwriting the deal themselves, and it just becomes this whole long thing, right?
Yeah.
Okay. So in terms of projects, what kind of qualities are you looking in projects that are coming your way? Like what kind of projects excite you as a lender?
So we lend on, there's three kind of key criteria for each loan. Number one, the specifics of a project. So a 20,000 square foot home in New York region, people build those, but their tastes are so specific and the market isn't deep for 20,000 square foot homes. So people might be building them, but you can probably count the number of people that are willing to buy a 20,000 square foot home in New York region on one hand. So we like to be kind of in the deeper part of the market. So if you're building a $2 or $3 million home in New York region, that's a much deeper pool of people. And that was kind of traditionally we were financing custom homes. And now the custom home market doesn't make sense because the land is too expensive and the hard costs are too expensive and the market isn't as liquid as it used to be. So building custom homes on spec doesn't make sense, in my opinion, at the current valuation. So we've pivoted from financing custom homes to multiplexes. So number one criteria, does the project make sense? A multiplex in many areas makes a lot of sense. Number two, do you have the experience to do what you say you will do when you will do it? And if you're don't have as much experience, that's okay. Is your team capable of getting it done? So do you hire a good construction manager? Do you have a right architect, engineer, planner for whatever you want to accomplish? It's the right team is critical. And then number three, financial strength. So if there's a cost overrun or a delay, do you have the money available to inject into the project to overcome issues? Because the last thing you want is a project to be stagnant. If you run into financial issues, they kind of compound from there. So if you need to come up with 100 grand, you don't have that money, the project sits, liens add up, interest rate accumulates, and just these problems kind of spiral. So the key is to have money available so problems don't spiral and compound.
You know what, this you're raising a really interesting point, especially about the luxury space. And I actually what I do want to ask you here, residential luxury. Obviously, when somebody's buying a lot, let's say 45 or a 60 by 120, let's say in a place like Markham on Richmond Hill, the key, every single guy or every single gal does the exact same thing. They want to maximize for square footage because they think they're going to extract that as a form of price at the end and economies of scale to build and all that stuff, right? So it's very interesting what you say because I have looked at so many homes in my career where I'm like, I don't think anybody wants a 6,000 square foot home. Like it's just 3,500 square feet without the basement is already massive. 6,000 is just, I don't know what you do with it. So it's very interesting you say that. Do you still feel that there is still a threshold maybe where like maybe something that's like 3,000, 3,500 square feet in Richmond Hill still kind of makes sense and you would finance? Or are you guys kind of overall kind of looking, the whole luxury space is a little bit tricky, maybe the downside's too big. Are you kind of like, what's your take on that? Like, what's the nuance there on lower end luxury versus higher end?
So the land is too expensive in this day and age. So if you bought a property 5 years ago and you want to build on it now, that might make sense. But you're probably better off selling the property as is and moving somewhere else. Like if you want to build a dream home to live in and love forever, that's great. More power to you. As long as you can afford it at the end of the day, that's okay. But in this market, to buy a house with these elevated land prices, interest rates are quite high, hard costs are very high. And when you go to sell it, you need a Tarion warranty. Tarion's being very strict right now. So
Mm,
it's illegal to sell a new house in Ontario without the Tarion warranty. And they're enforcing it quite a bit. And a new home, you have to pay HST on the sales price. And this CRA has been cracking down, and you cannot avoid paying HST on selling a new home. So once you
mm,
add up all of those costs, it just doesn't make financial sense. You may as well put your money in the stock market, put your money in a GIC, and the amount of work you put in, you may as well work on under contract for another property owner. It's just the amount of time and effort. It just doesn't. It's not nearly enough to justify the return, like in custom homes at least.
yeah. So yeah, I think what you're saying totally resonates with me because you're addressing an acute issue currently right now. If I was to go buy a lot right now at today's prices and then build with today's costs, you're basically saying this doesn't make sense. And it truly hasn't made sense in a long time. So this is really addressing anybody who potentially wants to go and flip stuff. And I've even told clients myself, this day and age, if you're buying a property, the second it requires a permit, I already feel it's not worthwhile buying. You're better off just going and buying something that's closer to what you already want so that you don't have to go through the whole process just because of time, interest rates, costs, the uncertainty of how long all this stuff is going to take. So yeah, like especially, and I have clients that flip. And again, anybody that, if you're pulling a permit, and I'm assuming you want to pull permits to demolish and then build, it's like it's very difficult to make the case unless you get some crazy steal of a bargain on the lot. Or, like you said, very important point. If you bought the lot many years ago, you sat on it, so your adjusted cost base for that lot is significantly lower than what it's worth today, then go by all means, go ahead. Okay.
Sure.
That is very, very interesting. So the one thing I want to do is I want to go through a couple of examples that I've seen you guys deal in finance, and I want to kind of give me a background on the project and then just the financing, what you guys financed, what the rationale was. And I want to kind of actually find out about the team, the profile of the teams that did these things. What's really interesting to me is I actually want to start with one project that I saw you guys did in, I think it was in Pickering, and it was very simple, but not. Everybody looks like a genius when they do something, when you see the end result. But what I find in real estate is when I see something that makes sense, it's very difficult to actually sell the potential of something to somebody because when it's just just a site or some crappy house, it's the potential may not be that easy to notice, and then obviously there's the risks and the unknown, so not everybody understands it. So this lot in Pickering, me personally, so I want to start here because it caught my eye because number one, the lot is small. Okay, it's not your traditional lot. um, Pickering, I like Pickering. I kind of know the area. I know that there's potential here, right? I don't know if everybody truly understands that, but can you walk me through this? So this was an end user, from my understanding, that bought the slot and wanted to build a house for themselves. So it's kind of like what we just talked about. So this is not like I wanted to build a luxury home. This apparently, from what I can tell, this is an end user. It's like I want to build, I want to live in Pickering, I want a new house, I want it done the way I want it. So here's what I'm going to do. And they approached you for capital for this. Is this kind of what happened here?
Yes. So the lot was actually bought free and clear. So the purchase price was quite low. The the purchaser paid cash for it, and then we they spoke to us. We actually had a builder in the in Pickering that we introduced the property owner to, and he probably built the first custom home in Pickering. He sold it. It's funny enough. This builder sold the first custom home in Pickering for $500,000, and he made money on that. It's kind of funny that how much the market has come since then.
Wow.
So this was a tiny bungalow, probably was a cottage 80 years ago when it was purchased, when it was first built. Tiny lot, I think 20 by 40 maybe. And the purchaser went through the planning process, got approval for 3 stories. The entire neighborhood was kind of up in arms about it, but eventually she got the approval for it. 3 stories with a balcony and overlooking Lake Ontario. So it was a nice, fairly simple transaction, though. We financed 100% of the hard construction costs. We gave them some money up front for working capital because you need some funds for deposits and interest. And we had an interest reserve to service interest during construction. And it's really quick, simple, and easy project. So it's not overly complicated.
Okay, so not overly complicated to you, but I think to the layman's, I think this will make their head spin a little bit because I just know the hoops you have to jump through, and because not all lenders are the same, and not lenders have the experience or the appetite to finance stuff like this, but they say they do, and then once you engage them, it becomes this whole rigmarole, right? So this is why I want to see, can you share maybe a little bit in terms of timelines and numbers attached? I don't need exact numbers, just ballpark numbers. What are we talking about here? So let's say, uh, I'm assuming this is relatively recent from the last couple of years.
Yeah, I think we completed construction about a year ago. Okay, the secret sauce is it's about lending on a cost to complete basis. So a lot of projects run into problems. Let's say the hard cost budget's $1 million for simplicity, and there's only $800,000 in your loan facility. There's a $200,000 shortfall. So if there is a shortfall, it's up to the owner to make it up front. So as long as the owner puts in, call it 300,000 up front, and then the 800,000 from the lender can be injected towards the end. The problem is if there's a shortfall, some lenders aren't as experienced, they're not as disciplined. If there's a shortfall in the project and you get about 80% of the way through, and then there's still an equity requirement there's a shortfall between the loan amount and your budget, that's when projects run into issues. So we always lend on a cost to complete basis. So for this specific example, we were happy to get involved because we're financing 100% of the hard costs. We know the area, we've seen the comparables, there's equity there. We introduced them to a very good custom builder we have a great reputation with. He's a great executor. So a great team in place. They're building a great area. We finance 100% of the hard costs. So to us, we understood the risks and we're happy to support the project.
Okay, so if I was to, let's just say, I'm going to spitball here for a second. Let's say this lot was bought a few years ago. I don't know. Let's call it, it was probably between 500,000 and $1 million. I don't know specifically. Let's call it in
Yeah.
that ballpark. So she buys it. There's no mortgage on it. Beautiful. She obviously has the ability to pull money out because there is a home on it. So it's not like it's vacant land. So she has some buffer there. She approaches you and says, okay, I want to build this home. What makes her a qualified person to approach you is because she's well backed, meaning she bought it, she doesn't have a mortgage on it, probably has good credit, all that stuff. You introduce her to a builder, the builder comes in, you've worked with them before, and they say, you know what, to build this, again, I'm spitballing here, I'm going to assume it's going to be at least 350 bucks a square foot. Maybe
Yeah.
more, maybe less, whatever. Look, obviously, I don't know the finishes. I don't know anything about it. So let's say I think this thing is like 2,000 square feet. Who knows? So let's say I'm assuming under $1 million to build, right? So is that where you come in? So she comes in, she buys the original property. You come in for, let's use a round number of $1 million to build. You came in, you
Right.
financed that. Now there's construction draws. So she is obviously not using up the money up front, but there's interest also that's accumulating. Can you just walk me through like how the like how you guys give the money out and then how interest is paid and when the whole thing is settled.
So in this case, in case this case, we could have either, if there was a mortgage on the property, we either would have discharged the mortgage, the first mortgage, so we'd be in first position. And in this case, we gave her a couple $100,000 up front for deposits. And then they would fill out a budget on our template. Our secret sauce is we have our in-house cost consulting, so we don't have to hire a third party to monitor things. We understand construction well, so they have a budget on our template. This budget is the same across all of our projects. So we can give advice saying that, okay, this item is budgeted too high. You could probably get a better deal on this materials, or these are too low. You're in danger of cost overruns. You might want to increase this kind of cost. Like drywall's gone up. Your budget for drywall is too low. We have to increase your budget for drywall to avoid cost overruns. So we give them a couple $100,000 up front. They would start construction. When they need money, they call us. We send our inspector. Then within a day or two, we advance funds directly from our lawyer to their account, and they kind of move forward with construction. So it's what's called on a work in place cost to complete basis. So the work in place is what's physically been done to the site. And then the cost to complete aspect is there has to be enough money in the loan facility to complete construction. And this way we minimize the chances of cost overruns. There's always enough money to complete construction. It's safer for the property owner, safer for the lender, and everybody wins in that case.
Got it. That makes quite a bit of sense. So then when this is completed, assuming it's an end user that's going to live in it, does she then go to the bank and basically get a conventional mortgage to pay you guys out?
Exactly. It's a finished custom home in Pickering, desirable area with a person who could afford the home. Any bank would be willing to take us out, and it happens all the time.
Given that this was done last year, so it was completed last year, obviously the market had changed from when she originally started this whole thing and everything was down. Did you guys run into any issues on deals? Maybe not this particular deal, but just on deals where, we were going through a massive transition and we're still kind of going through it right now. It's not as drastic. Any issues that you ran into on projects like this?
So not this specific project because we already had some of the cost data from COVID. So we had so many projects. We kind of encouraged them to increase the budget a little bit. We financed it, so there's no issues. I think previously during these COVID price escalations, it's been a tough time for custom home builders. Land was expensive. The COVID slowdown increased costs, and it was hard to get trades on site, and the municipalities were slow. So the custom home builders bought expensive land. The prices escalated quite above what they were projecting, and it was hard to get trades on site because everyone was building at the same time. So construction took a long time, and then towards the end of that, then the Bank of Canada started increasing rates from prime went from 2.45% to 7.2% in a fairly short period of time. So it was a perfect storm. And then when they overcame all of those obstacles, these guys got, if it was a spec home, then they listed the property for sale, the market wasn't there. So in core Toronto, the market didn't slow down as much, but the further you got from core Toronto, the more these things sat on the market and they had issues. But we lent to people with tremendous character, good individuals, and we helped them as best we could. And almost all of them got through the issues, and it was stressful for everybody, but that's the nature of real estate. Sometimes there's boom years, sometimes there's lean years, but it's important just to survive, to kind of fight another battle, go for the better years, better times, better return on investment.
Yeah, I hear you. One thing that you said that I think most people who haven't been through this wouldn't know about, but those of us who have would really appreciate is using a consistent quote sheet to deal with builders. And obviously, the big challenge there is that a lot of people don't want to use your quote sheet, right? You almost have to force it so that you get consistency in quotes so that because if anybody tries to compare quotes between trade to trade from builder to builder, it's a Pandora's box, right? Like everybody does it different. And standardizing everything is probably one of the biggest challenges, but it's also where you gain the most amount of transparency to understand what you're getting yourself into because it's a huge thing. So I don't know how you guys pull it off, but it's obviously very important, and I can appreciate you guys do something like this because if you're not comparing trades one to one, you're driving blind. You have no idea. And always people are like, oh, my buddy can do this for this, or my I'm like, what does that mean? What does that mean? Like, who went to Home Depot to buy that elbow, right? That copper elbow and bring it back. Like all these little things. It's like, oh, I did that. Well, the other guy included that in his cost, right? So you have no idea. So it's very interesting. Okay, so this one really caught my eye. So this one right here, this is, I believe it's a multiplex, right? This thing looks like, I mean, every square foot of this lot looks like it was accounted for. So, can you give us a bit of insight of what the person behind this project, what they did, what their vision was, what was financed? I mean, this is a beast in the sense that it's very interesting. It's an infill, and it looks like it was maximized to the like absolutely to the absolute max that's allowed.
So the site, so the builder we've been working with for the past 12 years, and he started, I guess he was an architect and he had a vision. I guess he worked in the high-rise space. Then he kind of moved to the custom home, like super luxury custom home space. And he had the vision for meeting somewhere in the middle. So the principles of high-rise demand and then the luxury custom homes kind of merged into this new kind of space. So in my opinion, he's like the godfather of the missing middle movement in Toronto. He really kind of pioneered it. And a lot of his previous projects that he's built and sold have now resold. And those comparables are used by appraisers now to value current projects coming on board.
Oh,
So this
wow.
person, his name is Evan Saskin, and his company's Blue Lion Building, and he's a great executor and builds a great product. So that's just a background on it and our relationship with him, and he's tremendous. And I would check out his social media, Blue Lion Building, Evan Saskin. So he's been very transparent about his involvement in the industry. He's kind of doing his best to kind of raise up the entire industry, and he offers consulting on some projects. So this is I think it's a fourplex in the main building, and there's a laneway suite. So he builds it with the proper the fireproofing the divisions between the units, and so right now this is built as a multiplex. So 4 units in the front, 1 unit in the laneway, and then prior to completion, he's going to work with the city of Toronto on registering it as I actually think it's a 4 unit condo. Sorry, a triplex in the front, laneway in the back, and he's going to register it as 4 condominium units, and he's going to sell each individual unit once complete as a condo. So um, to live in this area of Toronto at $1,000 a square foot for the end value is actually quite reasonable, especially in a very high-end product at street level with some of the best restaurants and amenities in the city. So it's much cheaper to live in this than a comparable custom home in the city or a high-rise condo. So it's cheaper than much cheaper than the custom homes in the area, much cheaper in the city. But when you're in one of these completed homes, it feels like a single-family custom home. It feels like your own kind of detached house in the city based on the way it's been designed. But it is a multiplex.
That's very interesting. I know there was, if memory serves me right, I remember seeing one place in East York, I believe it was off of Mortimer Avenue, where they did I think it was like a fourplex potentially. And I think it was one of the first ones that kind of caught some attention where they did this exact same thing where they split it up like they created a condo and then they split the units up and I do know that I actually should check what happened to it. I do know they sold one. I don't know. I'm sure eventually all of them will sell it. Just a question of how much. And obviously the market the way it is now, it's like we came off a super strong market to a record low market. So it's unfair to really compare how these things perform just because of the way the market is right now. But that's very interesting. And my understanding is actually historically, this used to be allowed. Like I think we have properties in the annex and stuff that I don't know if they were set up as condo cores, but they were set up as separate units. And I think eventually bylaws change and things change. And then people have been trying to do this. And I think finally it's getting some traction. So it's very interesting that this person in particular, that were they able to do this condo corp registration in the past on past builds, or is this the first build that they're doing with this condo corp?
So going back to the previous project in Mortimer, we financed that.
Oh wow.
It
Okay,
was
so you're the right guy then.
it was a
Okay.
triplex and a garden suite. All four units were sold. I think
Okay.
John and it was a great price per square foot they sold it at. It made a lot of sense. So it was a big discount over the high-rise condos. So the purchasers got an amazing deal, great location. Our builder did quite well on a price per square foot basis. He sold for quite a premium. And our client here that built this project, he's been doing it for the past 12 years. And even 12 years ago, he was registering condo corps as in two and three. So he'd buy a row house or a laneway, build 2 to 3, sometimes 4 units, register them as condos, and sell them. So there's about a 12-year history of these things on the market. They retrade, and there's very few common elements. So it's not exactly a condo corp. Like it is a condo corp, but it's not as complicated as some of the larger condos with more amenity space. You kind of have your own kind of elements, and then there's certain common amenities, like the certain very minor common elements that um, are involved. So it's a bit of a complicated process, but it feels like a freehold. Most elements are freehold, but there's certain minor common elements.
That's really interesting. Are you able to share roughly what, because these are very recent, okay, and they're in this market, ballpark what it would cost to build something like this?
So in downtown Toronto, it's quite expensive to build. It's such a tight site. Um, you probably require shoring on either side. The finishes have to be high end based on the neighborhood. I would say minimum 400 a square foot.
Okay, that's not as bad as I like. That's relatively reasonable, I would say, for something
Yeah.
like this. Bless you.
Thanks.
So call it 400 bucks per square foot, and so and then a site like Mortimer in East York, is it safe to assume that one's less, or would you still kind of say it's in and around 400?
It's hard, depending on the square footage. I would say a little bit less in East York because they're easier sites to build on. Like in the city, they're so tight that it's quite expensive, especially with shoring. If there's no shoring involved, it gets a lot cheaper, and if you have access to the site, it gets much easier.
Right. So this is a different site.
So
Can,
that builder is the same builder that built Mortimer.
yeah, I could see a lot of shared elements in terms of just the aesthetic. Um, okay. Oh, so this is the one that built Mortimer, the one that built this.
Yeah, same client.
Oh, okay, right on. Okay, what can you tell us about this one that may be different? Because what's the location of this?
It's in the Junction.
Okay. How was this one different than, for example, Mortimer? What were it? So obviously you're dealing with an infill. What's the lot size here, by the way? It looks like what, like with 35 by 120 or something?
I think approximately, maybe less.
Okay.
Um, so it's similar to Mortimer, but I guess the problem was Mortimer was built before the new regulations
Oh,
allowing
okay.
multiplexes across the city. So the builder on Mortimer had to legalize units as the process went on. But this one, you could build as of right, and it made it a lot faster and easier and cheaper to get approval for the project. So we introduced him to a condo lawyer that's doing the condo docs, and he could reuse a lot of the documentation between Mortimer and this one. So the more projects you do, the easier it becomes to register them as condos. So I think it's 4 units in the front, and then a fifth unit in the garden suite, and it's amazing. The soundproofing between the units are incredible. Like there's like kind of soundproofing in the floor. It's just a very well built, solid structure, very clean, good site. So he really knows how to build, and it's not easy to build. Like between a custom home and a multiplex, there's fireproofing, there's soundproofing requirements, or even just not necessarily requirements. You want to go above and beyond the requirements, but it's just a different product. So I'd really hire somebody that knows how to build one of these well.
In this case, so the builder is the builder the also the client that owns this, or is the builder like or did somebody buy the lot? And is there somebody behind that's orchestrating the whole thing, or is the builder also the owner?
The owner is the builder, and
Oh,
he's managing construction. He is a professional builder himself. We've been working with him for 12 years now. He started with custom homes in Toronto. He was in Quebec before, and now he moved into Toronto. When he came to Toronto, we started financing custom homes for him. He'd buy a lot, split it in two, build two homes, and now he's kind of transitioned from building custom homes for resale to multiplexes. And he's a terrific builder and great client, and he's doing quite well.
and I'm assuming this is obviously not for him. So if he engaged in a condo with a condo lawyer, I'm assuming this is the same thing. He's not building this as a purpose-built rental. These are purpose-built condos to be sold off.
Exactly.
And is it safe to assume also that the numbers to build these as purpose-built rentals doesn't really like it's probably a lot more lucrative to build these as condos and sell them off. And it's also immediate liquidity, right? Rather than financing an entire asset and renting it.
Yeah, um I think this is not for the faint of heart. I think I I would probably start building purposeful rental multiplexes before building something like this, or you have the advice of somebody that kind of knows what they're doing to build. Um,
Is
but
it, what is the main reason for that? I'm just curious.
I
Because
think
it
it's
seems
about
like you're going through like similar pain. It's just one has like relatively quick liquidity and the other one has just an annuity that's paying you via rent.
sure. And there's different kind of elements in the structure between condos and purposeful rentals. In some cases, the city to allow you to register as a condo. So I would get the right advisors. I'm not an expert in that element. I don't know the subtleties between them, but there are subtleties in how you build. And I would get the proper advisors to kind of walk you through, especially on a first-time basis.
Right.
But this is definitely
Makes
an
sense.
attractive, it's attractive. And it has to be in the best areas. Like it's not cheap to live in the junction. So this is a way of people want to live in the junction. So they're willing to kind of live in these kind of smaller condos because it's such a desirable area to live.
No, I love it. I think this is incredible. This solves so many problems. This because there are so many builders out there. I know a lot of great builders that they're kind of stuck right now and they're at a crossroads. Like, what do you do? Because, you know, people don't want to build these monstrosities, and the ones that do, they're just far and few in between. So this is such a great option where you can still continue to add housing supply. And if I would imagine, this is probably desirable housing supply, right? It just depends how you build it. It comes down to the quality of the unit. But to live in an area like this where it's residential and in a condo on a nice quiet street, I mean, what else could you ask for? So can you give me a bit of a background? Because this one doesn't look as involved as the ones we just saw. So kind of what was the deal here?
So these are so there were semi-detached duplexes, and they're about 100 years old. So I don't think they could have demolished them. So they basically gutted the interior of each duplex, and instead of having them side by side, like one unit on top of the other, they kind of made them resemble townhomes. So one unit faces the street, and there's the basement and the main floor, and then the one unit faces the backyard, basement, main floor. So it kind of feels like a townhome from the inside. Nice high ceilings. So they did the extensive renovation of two historical buildings, and those are super difficult to do. So renovating historical properties is certainly not for the faint of heart. So they did the renovation on both, and then they built two garden suites in the rear, and they're able to triplex on the right-hand side. So there were two old historical like duplexes in poor repair. So not a lot of people were willing to take on a project of this size or complexity in the area. Our clients saw an opportunity there. They jumped on it. They built it. We supported them by taking out the existing financing and financing the hard costs, providing an interest reserve. And once they build a triplex, they're going to refinance the whole site with CMHC, take some equity out, and kind of move on to the next project.
Okay. So there's a lot here, and this one is very different. This is very much outside the box. Like what I really appreciate in this right out of the gate is a lot of these duplexes are 1 story and 2 story. And that's
Yep.
probably the biggest knock that people have. Who wants to be on the first floor? So splitting it like this That is an absolute hack, and I've seen other people do it in the past. Obviously, it is not cheap to do, but I think the value add here is tremendous. So, just so that I understand, this entire lot like this was purchased. So, this is one duplex, another duplex. They did the renovations inside to reconfigure the units. Then you
Yep.
have these two garden suites in the back, and the triplex. What am I missing here? Where is a triplex?
I think maybe a triplex by that spruce tree in the bottom right-hand side.
Oh, this here?
No, towards the left. So there's a vacant area on
Oh,
the
okay.
right-hand side between
Oh.
the tree and then the neighboring spruce tree, and the access would be on the left-hand side of the property. So where that area is, that's where the city wants them to build a triplex for 9 units in total.
Oh, wow. Okay. And wow, that's so are these purpose-built rentals or are they going to try to do it as a condo corp as well?
So for the interim, it'll be purpose-built rentals, at least 5 years at a minimum. And in 5 years' time, they might want to register them as condos. But they'll see what the market's like. They'll see what the process is like from there. But eventually, I
And
think long term, 5, 10 years out, they would like to register them as condos and sell as individual units.
and is there a reason they're doing this wait? Is it because it's in a different municipality like in Durham and it's not in Toronto? Is that the reason for the wait?
Yeah, it's not as tested. In Toronto, it's quite common. In Durham region, it's less common. It's expensive to do in terms of the multiplexes, and it's still quite lucrative to do purpose-built rental. Like the rental rates in Durham are quite attractive, especially on when you the land is quite cheap. When you look at the purchase price of a lot on a price per buildable square foot, it's quite attractive. I've seen a site being built for $95 per buildable square foot as a
Wow.
purchase price, which is the lowest I've seen in many years. So Durham is quite attractive in terms of what you could buy a property for versus what you could rent for, because it's still quite difficult to find nice rental accommodation in Durham. Good economy, you have some post-secondary universities, so it's worked out quite well.
This is very interesting. And I guess, yeah, not for the faint of heart, because you don't want to be the first one to be setting precedent and going through all the expenses. Let somebody else hopefully do it and then wait it out. And then once there's a playbook at the city or the town level, you just copy. That is incredible. This is very exciting for me personally, just to see this because you don't see it. And I think there is no choice but for this to become a lot more common because the one thing I hear a lot from investors like Toronto is done, GTA is done, right? There's no opportunity left. We can't flip I've been in this game too and I've done it and it is very difficult to make numbers work. And if you can make numbers work, usually it comes with exponential risk and a bit of speculation, right? Because that's just how the game has been. But this really opens up an entire new level of opportunity for those that are willing to kind of research a little bit more, be more patient. It's not immediate. Um, Let me ask you. So Toronto is easy. I live in York region. I grew up in Toronto. I like Toronto, but just for selfish reasons, I want to, if I was to do something like this, I would probably want to do it close to where I live because I'm a hands-on person and just proximity, who wants to sit on DVP, right? If you were to do something like this, have there been projects like this in York region that you know of? Like I know Newmarket, for example, would probably be a fantastic test bed for something like this.
Unfortunately, I live in York Region as well. I'm trying to buy a house for myself, and to knock down and build a custom home, the land's too expensive in my opinion. And I haven't seen any projects, unfortunately. I think Barrie has some good opportunity between what their zoning and what the rental is. I don't I could be wrong, and hopefully there's some great places in Newmarket. I guess maybe close to downtown core is beautiful. So nice walkable locations that are desirable. And there might be something to be said for buying a lot and then going through committee of adjustments and saying, okay, I could build a triplex and garden home as of right, but I have a better idea for the site. And maybe getting a different kind of configuration to be more something that resembles townhomes. So in my opinion, it might be you might have to get a little more creative in York Region to make projects make sense. but I think maybe not as of right with the multiplexes. I think the municipalities aren't as flexible in New York region from what I've seen to make projects work. So in my opinion, I would go to Barrie and Durham, hop on the 407, hop on the 400 or the 404 to find something. But if you really want to do a project in Durham, it is a York region. It could make sense, but you might have to be a little bit more creative and kind of blaze more of a trail. But I'm happy to look at any project in York region, and it's about being opportunist, in my opinion. So do the math on every single site you can, try to make the numbers work, and blaze a path forward, and kind of see opportunity where others don't.
Here, I'll give you one kind of hack. Not a hack, but this is something that it's very actionable for a lot of people who watch this or who want to do something like this. Um, for me personally, based on my experience, and again, this is common knowledge for those of us in the space, is that generally speaking, projects that make the most amount of sense are usually if you're buying on a main arterial road, because first of all, you're not competing with families. Nobody wants to live in a busy road, and you're getting a massive discount relative to the inside of the neighborhood. So that's where I've been thinking that might make sense because, for example, if I was doing it as a purpose-built rental into the future, tenants are not going to care as much as long as it's nice accommodation. For them, it's transit or transitory housing anyway. So as long as it's nice and my cost basis is low, you can make the numbers work. But now I'm thinking to myself, well, what if I'm building it to register as a condo corp down the road 5, 10 years from now? Maybe that is not the move, but I've always thought these main arterial roads, you do get the traffic are probably a decent place to start because you're getting the cost of land is 10 to 20% discounted relative to being inside in the neighborhood. So something I've always thought about, I have not executed on because obviously it's one of those things you don't want to be the first one. So you just kind of watch, but then at the same time, if you're not the first or some of the first people, then the discounts get smaller and smaller, right? As people kind of figure this thing out. But I guess time will tell. Maybe the other option is look at North Toronto or somewhere that would make sense. That's obviously closer to York region. This is super interesting. What's let just off topic, but not off topic, but away from these types of builds. What's your take on the real estate market? People ask me all the time, what's happening in the real estate market? I always tell them it really depends who's asking. Are you asking as a buyer, as a seller, as a bystander junkie, like most of us are just watching a train wreck? So my answer always varies, but I want to now pass it on. I want to ask other people, what do you think about the real estate market going to 2025?
Okay, let's start with the condo market. Small condos are in for some pain because the investor sentiment has shifted, and it's only going to get worse and worse. So I think year over year, small condos will feel some increasing pain. The funny thing is, large condos, though, 1,500 square feet and older, we had an investor that has a house with a two-car garage at Yonge and Summerhill. Fantastic area of Toronto, beautiful home. She wants to downsize and move into a 2,000 square foot condo in a nice building. And these 2,000 square foot condos in nice buildings cost more than her detached two-story home, beautiful with two car garage in Yonge and Summerhill. Fantastic location. So large condos will increase in price because baby boomers with money, they want to downsize and still live in nice accommodation, but these are scarce. No one's building condos at over 1,500 square feet right now. So those units will increase in value. Condo land, I would stay away from. I think that's ripe for correction in the market based on that. Homes in Toronto will probably tread water, even in a softening economy. I can't see it going down by 5%, more than 5%. I can't see it going up by more than 5% because it's not affordable. And the further you get from Toronto, you might get a small pullback in prices in a softening economy, but there's still a shortage of detached homes. Personal rental is probably the best bang for your buck if you're looking at taking on a project, but rents might soften because there's going to be fewer permanent residents in Canada going forward, or non-permanent residents in Canada going forward. So rents will be a little bit softened. Rental rates won't grow or might fall a little bit based on a softening economy and fewer non-permanent residents.
Yeah, I feel I'm cautiously optimistic. I was a lot more optimistic in December of 24. And then when I saw the stats come out for the month of December, what I do is one thing I do on my YouTube channel, I just post once a month and I talk about the seasonal stats. So I've taken seasonal data for the last 16 years for the GTA of how price performs, absorption, active listings, new listings. Because everybody, every single month, the stats come out. Oh my God, so many new listings. Oh my God, so many like and if you don't have context, that if you don't know, for example, that we usually have 10,000 sales that happen in the month of May and we only get 7,000, like you don't know 7,000 is that good or bad. It sounds like a big number, but we're 30% lower than where we should be. So the one thing that worries me the most right now is that we're starting 2025 with 50% more active inventory. And that's the first time I've seen it to be that high. And again, this is going back through a ton of, I mean, 16 years is all the TREB gives us easy access to. So I don't have the data for prior to that. It's not like I decided to stop at 16 years. And that's the only thing that kind of concerns me. But the interesting thing is we've had two flat years. So to me, these are crash years. 23 is a quote unquote crash. 24 is a crash because we're used to 8 to 9% appreciation on average, and now we're getting two. So that's significantly lower. And I'm actually super surprised at how resilient prices have been and sellers have been holding on. Surprisingly, I am seeing a bit of a capitulation right now because even speaking personally, I had one listing that sat for 3 to 4 months. We were priced well, but I guess not well enough. And it's the price pressure is on. And then as you get more active listings and as your neighbors are like, you know what, I'll give up 50 grand, I'll give up 80 grand just to get out of here. It just continues to put the price pressure on everybody else. So it's very interesting. I don't know. I was optimistic in December. Right now, I don't want to say I'm not optimistic, but it's definitely very careful. You got to be very careful. So to end users, I always tell, if you need a place to live and you're well capitalized, I mean, you need a place to live. There's nothing there. It's for the investors where you really got to be careful what you're doing right now because you can get burned. You have a lot of people that, especially during COVID, that went out and bought a bunch of stuff and now they're underwater. And it's unfortunate. I hear the stories in private all the time about people being cash flow negative. I spoke to like three people yesterday, just friends and just catching up. One guy's $12,000 negative cash flowing a bunch of properties. Another one's 5,000. And these are all, decisions from during COVID, right? When everything was just insane. And I even got caught up on I actually did some deals myself personally. Thankfully, I was able to come out unscathed, but it's wild times. So it's very interesting. The one descriptor I've heard people use is going to be the lost decade. I don't know what will happen over the next, call it 5 years, but it seems like it's going to be the lost decade if we continue to tread like this. Flat prices, we're at record low activity. So we're doing, just over 60,000 deals per year, where we usually do 30 to 40% more. So it's definitely an interesting time.
Absolutely. I think it's got to survive. So as long as you're willing to hold on to something for 5 years plus, if you need to, then that should kind of see you out there. So I think the key thing is staying power, money for contingency, and just be willing to hold out long term. For if you buy something today and have to sell it a year or 2 years from now, yeah, you might have some pain. But yeah, I think just staying power is probably my key theme.
That's 100% it. All the older guys I talk to, it's always the same advice. It's like, do you have the staying power? Always. Do you have the staying power? And I looked at a chart about like the last call it, 5, 6 crashes in Canada, in Vancouver, Toronto, Calgary. And generally it seems like on average, if you buy at the peak, you need roughly 5 to 8 years to get that price recovery back.